Mining Weekly Online is talking to James Campbell, CEO of Rockwell Diamonds, a South Africa-focused company that is listed in Toronto and Johannesburg. James, there's been a lot of emphasis on trying to drop costs here, and we note quite a significant drop in your costs.
Our costs are chiefly driven by the cost of our earth-moving kit, the maintenance costs, the depreciation, and the fuel and oil. We looked at a number of different options. And to cut quite a long story short, we signed a deal with Equestra where they would supply on a full maintenance basis 100-ton trucks, large front-end loaders, and the like. And that started about 2 months ago. And the net result of that over the last 3 months is that we have been able to achieve and exceed our budget volumes, and we've been able to radically drop down and more accurately predict our maintenance costs, as well as limit our fuel and oil costs. And this has basically meant that 1 month we actually dropped below $7 per cubic meter of processed ore. Our target is between $8.20 and $8.50, and if we can target that, it allows us to mine the lower grade and more marginal areas and basically expand our resource.
You've still got that target of 500,000 cubic meters of quality gravel a month. How close are you to hitting that target?
3 years ago, we were sitting at 120. We're now sitting at just over 360,000 cubic meters per month. We feel that with the various expansions we have in plan for Saxon Drift itself to take it up to 200,000, Saxon Drift Hill to take it up from 80 to 100, and then Alluvial to take up from 100 to 120, we'll be knocking on the door of 400,000 cubic meters. I think that's probably about as much as we can stretch our balance sheet and stretch our current resources. Going beyond that would probably require the construction of a new mine at Wouters-Pan, and that's something that we are contemplating.
And if you do hit this target of quality gravel at that 500,000 cubic meters a level, does that take you into earnings visibility?
Yes, it does, Martin. It's very much like a stock exchange investing. That if you have 2 or 3 shares, you're going to be very, very volatile. If you have a dozen or more shares, you're going to be much less volatile. And our statisticians predicted that for every 1 million tons or 500,000 cubic meters, you'd recover a plus 100 carat stone. Plus, of course, you'd recover a half a dozen plus 50s, a number of plus 20s, etc. And over a quarterly period, at 1.5 million cubes per quarter, you would start to have quarterly earnings visibility and predictability.
Expanding Alluvial, how close are you to doing something there?
The key component to expanding Alluvial is actually expanding our infield screen at the front end. We have the earth moving capability to take us up to 120. Our wet plant, which is basically the DMS and the Burevestnik concentration machines, can do 120 as well. And we've basically already put the plans in place and will look to implement an expansion on the infield screen by the end of this calendar month.
What news can you give us on Wouters-Pan?
Wouters-Pan is very exciting. We put together a preliminary economic study roughly 2 years ago, which looked at a 360,000 cubic meter per month producing mine for around about $40 million. Now that's clearly something a $20 million company is not going to contemplate. So what we're looking at now is a staged or phased development of that mine, starting round about at 150,000 cubic meters per month. And what we're looking at is to possibly bring on the mine at the end of the life of Saxon Drift Hill Complex, which will allow us to use the kit from Saxon Drift Hill Complex, as well as the skills and the people that we have there too. On the balance sheet side, if I look at that first, is that I think we've come to a point where if we want to actually expand into Wouters-Pan and make it a meaningful, sustainable operation, that we would have to contemplate a capital raise. Debt is not something we are particularly keen at looking, in particular because with an alluvial deposit you can never really get beyond a 20% indicated resource. And that's not just something that Rockwell has. If you go and look at the largest, most successful alluvial diamond mine in the world, which is Namdeb, a joint venture between the government of Namibia and De Beers, they have exactly the same issue. On the people side, one of the things that we're looking very hard at is expanding our management team and also expanding our technical team.
What about the agreement you have on wages?
We're delighted to have signed, in fact, 2 days ago, an agreement with the National Union of Mine Workers on a 2-year wage deal, 9% this year and 9% next year. It is above inflation, but we do understand the political imperatives behind it. But what it does give us, it gives us a level of certainty for the next 2 years. And that's something when we talk to overseas investors is particularly important. So although we are only a $20 million company or thereabouts, we do move in excess of, if I do the numbers, over 1 million tonnes a month if I include Tirasano. And we do employ just under 1,000 people. So we have the infrastructure for a mid-tier mining company.
Tirasano, the royalty agreement there, are you happy with it?
2 years ago, you might recall that we were struggling to make ends meet. In fact, it's probably much worse than that at that time. And we had one very brave royalty mining contractor who started and struggled to make a go of it, but he did. And with a lot of application and dedication by the people there, we now have 5 royalty mining agreements in place. They're all doing very well. They've all expanded as far as they actually can. And it's providing very satisfactory income to us. And I think another important point on that, our Black Economic Empowerment partner, Mokopa Minerals, on Tirasano, have applied for a royalty mining agreement there as well. And we said yes. And we'll do whatever we can to help you, but obviously you will have to raise the money and get the kit to actually start the work.
You've recently done a Black Economic Empowerment deal.
We have signed an agreement with Mashlontlo Investment Holdings, and that's Richard Mashlontlo, who is my Group HR executive, and in fact who is my 2IC. So when I'm allowed to take my odd day off or thereabouts, Richard actually stands in for me. And he's partnered with a gentleman by the name of Opar Sekakuni, and they will ultimately take 30% on the underlying operating companies in the middle orange. That 30% will be split 70% between themselves and 30% a wide-ranging employee trust. Why I'm really excited about this is that actually nobody knows the business better than my executive team, and for my 2IC to want to invest in the company person himself is a big vote of confidence. It is subject to regulatory approval, particularly shareholder approval, and we aim to put it to our shareholders before the end of the year. The first 17.5 million or thereabouts rands is their intent to fund themselves, and the balance they intend to fund either through vendor financing or through the vending in of quality projects which they'll put on the table.
How would you describe the current state of the diamond market?
We're at a confluence of a number of different places at the moment. On the one side, we have diamond companies which are tending to have low valuations, and I know many CEOs say they have low valuations, but broadly across the diamond industry, diamond companies have low valuations. You have a diamond market which is strong. There are little jitters now in terms of the polished market, but generally it is actually strong, so diamonds are selling well at the moment. We have what everyone has been predicting for some time, is the supply imbalance is looming, so the long-term forecasts around diamond pricing are good. And then finally, which is basically a consolidation of my earlier points, is that you are seeing a renewed interest in the financing on diamond companies. Just 2 days ago, you saw an announcement by Peregrine Diamonds. They've just raised a lot of money. Stornoway Diamonds for their Renard project raised a vast amount of money for their project development. And then earlier in the year, Firestone Diamonds raised a lot of money for their Likabong project in Lesotho. But what I can see is a period of maybe consolidation, where smaller companies might consolidate and be put together because valuations are actually low. The diamond market is not prone to the wild swings it used to have, and I think that's partly due to the withdrawal of bank financing. So I would hope that we have that period of stability, at least for a short period of time. That we have the infrastructure to take on. And infrastructure, I don't just mean the kit, the people, the board of directors, and I believe the shareholder support to actually look at additional projects and perhaps some form of corporate activity.
That was Mining Weekly Online, talking to James Campbell, CEO of Rockwell Diamonds, which has had 9 consecutive quarters of diamond revenue growth, which topped the 71% year-on-year level in the 3 months to August 31.